Good afternoon and welcome to the end of week review for this week. And this week is the very first week of quarter 4, which is week 40. Exactly, we're week 40 right there. And this week is a non-farm payroll week. The data is supposed to be released on Friday, October 3rd. But the government shut down here in the US, so the data is delayed. But the markets move so good on Friday. If we are patient and watch see how the engineer liquidity, then we can catch the very big move. But we did learn the lesson on Friday. We get caught up in basically we just react to the markets. We don't respond. We need to be patient and watch to see how the markets engineer liquidity. Then we figure out how it moves. That's the huge lesson we learned right there. By the way, on Friday we did blow out our account after we reset them twice. Supposedly in this week we blow up our account on Tuesday and I think Wednesday and then Friday. So we blow up our account 3 times in a row. That's like very embarrassment, but that's how we learn. You have to willing to take risks and to see what you make up. You have to detach yourself from the failure, from mistakes, so you can learn. Don't attach to that. Just an event. Learn from that. That's a huge lesson first, right there. So basically, for this week, we have 5 full trading days of the week, and we can see that on the daily. That's the Monday range right there for the non-farm payroll, and it tells us that it's very nice right here. Non-farm payroll show purple no for now. So you see that's the Monday range. Is that right? That's the Monday range. Is that wonderful? Right there, the Monday range. So you see that on Tuesday it tests from above. But the way the Monday form tells us is test from below. For some big levels, so it likely gonna break that level. Let's go to 30. Yeah, 30, and let's see 9. Is that right? Yep. So maybe go to let's see, is that 12? Let's do 12 p.m. Yes, it's more touch rate. So we see that this is the Tuesday. So you see that when the Monday is at the range and it gives the signal kind of bullish right there because test from below, and then on Tuesday it greatly quit both range of them right there. So it gives the signal right there. So if we see that, so the level right there on Monday, that's the range right there. If you go with that range, it can be it at that level or that level. So we want to see on the Wednesday where the key move is formation right there. So basically, if we focus on the Monday range, we can see the story. So basically, on Tuesday, it tests both it tests the lower range and it tests the upper range, and it checks both the sell side, buy side liquidity and the sell side. But if you look closely on the Monday, it tests from below. That gives us a bullish right there. And then add on on Tuesday, it tests both level. Then on Wednesday, we watch carefully. As soon as we see that it's failed to stay below that level, then immediately we know it's gonna break. It's gonna go and rate the buy side liquidity. That's how I manage sell. But one thing we want to see right here, right? You see that it tested level twice, the Monday and the Tuesday. Then on Wednesday, it will break the level. That's both. It come back below, it will break it. That's exactly right there. All right, let's do this right there. Okay, let's mark this with a level. Do the price level for this so we can see. No, don't do the price level, which is right here. All right, it's the price level. See how this manifests itself in the 15 minutes. So what the high of this? 31.50. So 31.50. All right, so 31.50. And because the daily, so we want to make it a solid line. Okay, so now go into the Monday after today, this week, and the Tuesday and the Wednesday, see how it's play out. So we very excited to go see. All right. Great. So let's see. Okay, so that's the level. Exactly that level. So you see that the Monday, right? The Monday it tests that level right there. Right, and it break it. It tests from above right there. That's the idea. It tests and it fell. Test from above. That's how it never. That's the idea of test from. You see, that's the Monday. The formation of the Monday right there. So basically, in the Asia, it rally, and then in the London, it also rally, but when it go to the London, the New York, it reverse. Even though it's reverse, but it's the bullish. Yeah, you see that? There's the bullish formation on the daily right there. The reason why the level 67.31.50 is key level, because this candle, you see the minutes it break that level, then it's reclaimed right away. All right, so you have expansion right here, and then this one is curve. The candle after expansion right there. And to keep in mind, the minutes it broke level, it reclaimed. That where you know that the range just by the candle is the critical. It just take for a while you observe, you know this. So it's very subjective also. So sometimes it's not a clear cut. That's the nature of the trading game right there. And this kind of trading we are pursuing is called discretionary trading. Exactly. So very discretionary. It depends on how you view it. But for our for our perspective, for our experience, we choose this candle. That's why we know that level. And look, in the low of that candle is also matched with the level right there. It's set by FOMC meeting. You see that? It go back. You see that? The week before this go back to that level. You see the setup right here? This is the type 2 reversal and continuation. You see that? Test from above, right? Break and reverse. That is our type 2 right there. And remember, the type 2 is continuation. And that's exactly a continuation. A continuation into this week. So this week is the up close candle right there. Let's find out. I think we did take a when we do code review, not code review, when we do a week review for trading, we saw this and we did do a analysis or autonomy right there. Analysis, but another word is autonomy. So this is biological term right there. Alright, so we found this screenshot for the end of week. Last week we covered, so we're not sure we covered type 2 reversal right here, but let's go ahead and review. You see that test from above, break and reverse or reclaim. Alright, we just put the verbiage together. So basically here's the week before, right? So you see that level right here is set by the FOMC Monday range right there. The level is 66.8125. So you see that the Wednesday it tests from above, and then the Thursday it break the level. It even go down to the low right there and feel a little bit in the void gap right here. So that's the break right there on Thursday, and Friday it reclaimed right away. So the end of last week we have this question, right? Normally the type 2 is gonna be continuation, which is the next leg up question, and this week it confirmed for us right there. By the way, we go into the 15 minutes, you can see the level right there. Not this one, but where is the reversal? Right here. Great. Okay. That's okay. So we go right here, and how it's manifest itself. Here's the 6681 right there. It manifest itself on Friday. You see that? Below that level, they break first and reverse. And break, reclaim, and then boom, it break again. That's the key level. So, and this week is exactly correct. So that's when this one is reversal, then the next leg up gonna be, and exactly that is how it happened for this week. So basically this week is a next leg up. If we are really read the mark, the price action right there. So it's test from above, break and reverse, so it's gonna be next leg up. And let's see how the next leg up happen. You see that the Monday curve I compressed right there. It tests from below at this level at 67.31 right there. The Monday test that level from below. Tuesday test one more, and the Wednesday break real hard, but the Wednesday is kind of it flip right here. It's supposed to go down. If you look at the level, you can see that it also a setup to what to set up to is that a setup to break the level? Yeah, we can see right here. You see that test it break the level, right? Break test from above and reverse. It can be a reverse. Yes, and once there can be a sell up there also, but somehow it flipped right there. If you look at the candle range, you can see that is break it, right? Test from above and it can reclaim, which is go down the neck like that. So this is the key level, right? Key level for neck leg up or neck like down, and it did touch this level. That's amazing. See that level right there? It did touch that level. Let's see. Let's extend it to Wednesday. Is that right? Wednesday. That's amazing. Alright, so for this week, how do we know that it's gonna be a neck leg up? We did try that question from the last week and a week review. Then this week we see that the Monday open is way above the level right here, the key level, which is 81.25 right there. The level that it reclined right away, and look at the Monday. You see that the Monday is open above that level, and then it go all the way to this range, which is the level right here also, and it's close above that level, and then Tuesday is also way above the level. You see that above level, but interesting enough, on Wednesday it touched the level. See that it revisit level, and we thought it gonna break it, but it flipped. It flipped. So basically, right here is the level, the range that the people go long, right here. That's where people go long. So the level from 04 or yeah 80 to 04, about 20 point right here. That's the where it go long. That's amazing. Let's see. Let's make this is that right? Let's go a little bit better. Let's go with 15. See it. Yes, so let's see. Now we drew down to see yeah, so this is the range right here, and there we see that the Monday is set the Monday low. So that's the range right here, the range right here from 81 all the way to 05. So about 25 point right there. So go to the 15 minutes, our favorite time frame. So right here, yes. So right here, is that right? Yeah, 81 right there. The Wednesday it come down there. But look at the Monday, right? The Monday and the Tuesday is above level, and then boom, on Wednesday, during London time it break, and then boom, it break that it reclaim right away. So we bring down to the low time frame, which is the 15 minute right here. Where is the Wednesday? Where does the Wednesday? That's amazing right there. You see that where the Wednesday flip right there. So basically it go down, it rate the sell side, which is the low up. On the Monday, Tuesday right there, and it go all the way to the level of 81 right there, which is the level key level right here of the FOMC meeting right there, the level that it reclaimed on Friday, and Wednesday it did went down there. That's amazing. You see that? It just touched from above. It didn't break it. It tried twice. For 30 minutes it tried to break, but it happened in London, right? At 2 and at 3. That's twice. It did not even break it. Boom. Then it flipped from there. That's how amazing it happened. And then the level of 6705 right here, 6705 right here. Right after that, it broke that level, which is a key level right here, that level right there. So basically the range right here, that is like supply or demand right there, support level right here. So it become a support level, and then boom, the base right there, and boom, it rally. And look at this, and we trade right here. It's explosive right here, and we see that we mark right there. We see this level right there. So it break from that level and then down beyond that level again, and it tests from above, and then boom, it reverses. It's very explosive. It's because Wednesday is the first day of October, so it's very interesting right there. It's slow. We took the trade, but we let it run. We thought that it will hit this level. That's what we thought. But before it hit level, it pulled back all the way and make us nervous. We get out at even, and then start from there. It rallied. But you can see it right there. Whenever it breaks this level again, we need to go long. We cannot be scared. That's the lesson we learn. We get nervous. We get scared because we go so caught up with the outcome. We're afraid that we may lose, and we don't stick into our setup, into our game plan right here. Right? If we are see the explosive right here, we take profit and get out, and then when see this pattern jump in again. That's the lesson we learn. Alright, I took a look at the trade we takes on Monday. So on Monday you see that the first leg down right here, and then it retraces, and second leg down right there. Then at what time right there? Yeah, at 10. You see that at 10 we go in and we short them, which is right. You're gonna short them because you're gonna see that a lot of liquidity in Asian and London right there. So you have a rally from Asia to London. Then likely you're gonna see the retracement at least, and you already see the signal right there, and you can short right here, but it's a little bit too short. You see that it go into our favor, but then it flipped. The good idea is that let it go above the level, close above level, and then short them. That exactly happened. You see that we make mistake. Let this close on that level. Yeah, and right here instead of go short, we go long. That is a mistake. But look, as soon as it close above level, and you thought it's gonna be break out that where it happened. You see that? that right there, that's from below break and reverse. That's where perfect. We go short here, good. 10:45. But the trick that we need to stay in the trade, it can go all the way to the PM. Right here, it can all the way to the PM. One day right here. Yes. You see that the level we mark right here? Wait until it's close above that. That where we short right there. We go a little bit too early, so we learn our lesson. We have to patient. Right. The question is it the first leg down, retracement, next leg down, second leg down, and then boom, right here it will be the next leg down. And how do we trade that? We mark the candle after expansion and wait until close above that. And you see the failure gap right here also. Wait and then short them. We did go in right after a couple of make mistake trade. We get it right here. And it go all the way back to the open 18. In this case, because all the liquidity that is engineered from Asia to London, but we got chicken out right here. Chicken out right here because we're afraid we lost. That's the reason. We need to stay in the trade. See that we take the profit right away. We're nervous, but if we let it run, it continue to run, and if we hit our all the way down here target, we get take profit too early, and then we go in and short them. That's basically we trade with a lot of emotion right there. You need to understand how liquidity engineer and how it gonna go and check liquidity. You cannot, you see that? Instead of continue to stay short, we jump in and we go long. So that's our mistake. We go long again, boom. We should let our this third trade, the short right here, let it run all the way to the open at 18. So that's the very obvious mistake we make right there. Instead, let our trade short run all the way to the targets. We just exit, and then every move after that, we want to go long. That's not the wrong approach, because the liquidity is still there. So market gonna go down and rate all the engineer liquidity right here. And that exactly happened. And we paid a huge price right there. You see that? Boom, 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 boom. Go all the way down here. And this ran this error. Or demand or supply. This is the demand right here, or support level right there. So that's the huge lesson we learned on Monday. We need to observe and patience, see how the liquidity will engineer, and then boom, go with the. After the liquidity engineer, it's gonna make a big move, and just be patient, stay. But we do see on Monday it's very back and forth. It's very high resistant liquidity run right there. That's I see this. Basically, it's very toppy. It's not gonna flush. It's gonna not flush down easily for us. We have to patient and stay in the trade. It look like gonna flip, go back, but actually no, it keep going down, going down. See that? First leg down, retreat, second leg down, retreat, boom. It rip hard right here, 10:45. We go in here at the level, we learn our lesson. Whenever you see this setup right here, just stay in the trade and watch for all the liquidity to run all the way here. Stand in the short trade as long as possible, because you don't get out, because when you get out, then you feel like you need to go in and get more money, because you feel like you miss the trade there, that way, not miss trade. You left a lot of profits on the table, so you want to feel like you want to go in and get it back. That's how our brand is wired right there. we have to rewire it. And how do we write? Just make mistake and then we learn from there. Yeah, here's our write-up on a Monday. So we know this level right there. We see is break, it reclaim, break, reclaim, and break. So what do you call that? That is the type 3 right there. And in this case is a continuation with the next leg down right there. So first leg down right there, you make a low right there, and then boom, right there. So, and you can have a gap right there. It's so clear, right? You have a gap right there, then wait for it close above on the candle after the expansion, then you short them. It's so obvious. So that's in the type 3 right there. Let's do a markup right here real quick. So the 4 breakout type 3, it have 4 steps right here, and sometimes this cycle repeat itself 3 or 4 times. In this case only 2 times. 2 times, right? Break, reclaim, break it. That by itself 2 times right there. But sometimes you have it go up to break, reclaim, break, reclaim, break, reclaim, break 4 times. We saw that last time. And especially you have 2 huge fellow gap right here, so it gives you the beautiful signal. So we so caught up with the loss, with the outcome, so we don't pay attention. But if we pay attention, we did go short right here, but we get out too early. We need to let it run all the way at least at the level right here. 7, I think that's high time frame level right there. Or if you go to low time frame, it's gonna be the open range 18 right there. Weekly, the weekly open rate, it can come back there. You see that? The Monday come back there. So that's the lesson we learned. And then this is the 4 breakout right there at 9, right? The type 3, and then you have a type 2 happen at 45 right here. That's the 45 we're talking about. So basically you have, this is the first leg down right there. You have fair gap right there, and here you have right there, you have what? Test from above, right? And then it's break it, and then it's reverse. So this is type 2 and it's continuation right there. So look right here, you see very clear this level, right? Or test from above, break, and this one is test from break, that from above and reverse. You can see type 1 in here also. So what the close of this one is 28.75, and the high of this 26.25. Close. Oh, hold on, let's see what's the high of this candle. 26.25. Yes, 26. This candle open, not close. Open. Yes, 25. So you have a overlap right here. This is type 2, right? Break. And test from below, break, and reverse. That's the type 2 right there. But if you do a type 1, it also work right here. The type 1 is much clearer. You see that level right there? It break, it tests from above. Ideally, we want this to be closed or open up here. But it's open right there, just above that. So it can be touched from above right there, and then it's reverse. Actually, it can be a type 1. It's more clear. Alright, let's do a markup right here. So basically, yeah, you would love it to be into a type 2 because type 2 is gonna be you want it to be a type 2 where you see that. Yeah, let's see if we see, well, because you want it to be you want it to be a type 2. Let's go with type 1 for now. Because normally we want type 1 break. Right, this is break. And this one is test from above. Here and then the other one gonna be reclaim. So in this case it's type 1, but it's a continuation, like that. Okay, let's go step by step. And we see, okay, let's remove this one. This one is extra information. We don't want it. Yeah, let's delete that for now. And that level, okay, that's the key level. High time frame. Yes, here's on the daily time frame. You see that 67.31.50. That's the key level of the range right there. So basically, on Monday, go just above level, and then it reverse from there. Okay, so right here, let's mark this one to be first. Is gonna be break. Is second test from above. Sometimes the test from above, you want it to be not exactly at that level. In this case, it's very close. It is right at that level, right? It's open right at that over as that level, which is 60. I believe is 60. Yeah, 26, 25, 67, 26, 25. Yeah, the tap from above is open exactly at our level. So normally you want to not touch the open or the close, don't touch the level. That will be better. But in this case, touch the open just exactly at that level. And then the reclaim, number 3 reclaim. Yeah, and this one is happened at 10:45. That's right. This one 10:45. Yes, 10:45. So actually, yeah, 10:45. So which is in this case. Remember the down move right here is very toppy, very high resistance liquidity run. because the whole engineering liquidity from Asia to London, the engineer that they go, then they get a very topic. In this case, it's type 1. Normally, type 1 is in a, yeah, you can call reversal right here on a high time frame. But if you look at time frame, you thought low time frame is a continuing down move from here. Yeah. Let's go with continuation, right? Continuation. Continuation at 10:45. But on the daily time frame is a reversal. Keep in mind. Yeah, not related. Stay right there. No. So you have break it, test from above, but you have a, in this case you have fellow gap also. Keep in mind you have fellow gap down right there. And then you have reclaim or reverse right there. Know that we have two fellow gap down. Yeah, two of them right there. So that's another confluent, very high quality setup right there. Okay, let's save this one. Yeah, go back to this setup. We already mentioned at the early of the recording, but we can see that the early morning of Monday, you see that's the candle we check. This is the candle on Monday. We took as what time? At 8:46. You see that there? 8:46. That means it confirmed our anticipate the type 2 continuation right there. So basically it's the first leg up, the retracement, which is test from above, right? And then break it and then reverse. So you know that it's gonna be next leg up right there. That's it, the Monday. But in the middle or at the end, it looks very different. Let's see. At the end. Yes, at the end of the Monday. See that? Yep. You see, at the beginning it looked like huge, but then it retraced back. But it's still valid. That's the point we try to make. It's still valid right there. All right. Anyhow, we see that. Okay, we see this a type 1, but if you look a different way, it's still a type 2. Okay, type 2 right here. Where's our type 2? Right here. You can see it. No, not this one, but type 2. Continue. So you see that there is the test from below, and this one is it break it. Both of them break it. Because this one is special, because this one is, you can treat this one as test above, or it can be a break right there, and these two candle. Yeah, let rework this one a little bit so we can clearly see the detail. So this candle can be okay. let's check Rick screenshot right here. So basically, you can see the overlap, right? So right here we have definitely this one is first so clear, right? That's from the left, okay? And this one is breakage. So the break is from this guy is already a break, and this guy also break. You have two candle break. Yes, two candle break, and then you have the reverse. Yes, that's a beautiful right there. That's a very solid way to look at the forward breakout type 2 continuation, which is the neck leg down. So clearly right here you have break and not break, that's from below. You want it to be a short setup, is that's from below. And second, you want to break it. Keep in mind, in this case, we have this candle is just open exactly at level. And then the 1030, that's the 1030. We put the note right there. And reverse or reclaim in this case. At 1045. That is the type 2 we're talking about. Okay. Just keep in mind that let's put right here. We see that is a 4 breakout type 2, and we know that type 2 is 80% is go with the continuation, and you see the fair gap right there also, 2 fair gap continuation, new Asian. In this case, leg down. All right. So first, clearly you have a test from below, and then you have break. In this case, the break is manufactured by 2 candle, right? Normally you just want 1, and then boom. So the break in this case is 2 candle. Yeah, 2 of them. And the candle 1030 open exactly at and candle 1030 open exactly at this level. Which is right here. I think we did have the mark right there. Oh, we didn't tell the level. Then go back to the chart. We can see the level. Oh yeah, right here. 67, 26, 25. 67, 26, 25. 67, 26, 25. That's the level right there. better to move here. Yeah, let's move here for now. Yep. And then 3 is reclaim. Right, it's reclaim right away at 10:45. And know that we have two fair value gap down right there. Right here, 1, and right here, 2 fair gap. Yeah, so I think we much more comfortable with the type 2 right here because it fit into our narrative that the type 2 is mainly for continuation. Yep. It's confirm break, right? In this case, with 2 candle right there. And then reverse. So normally only 1 candle, in this case 2. Then we know the reverse is going to be very hard. What else we want to see right here? Yeah, I think it's a perfect right up. Okay, so we want to put the level right here. Let's mark the level right here is 67, 26, 25, which is this level right here. Yeah, that's the level. And this candle opened exactly at that level. Boom, it break it, right? Test from below, break it, boom, reverse. That is the type 2 we're talking about. Okay, let's save this one. Alright, we learned a bunch of lessons and we make a bunch of mistake on Monday. Now go to the Tuesday. So let's see Tuesday. Yeah, Tuesday we didn't take any trade. We busy, we stay out Tuesday. And actually on Tuesday we get our account back, so we don't want to trade. Then go to the Tuesday. Here's the beginning of Tuesday, right? So you see there. We did at the beginning at Monday we thought clearly you're gonna be neck like down, and then boom, it retraced. And on Tuesday it looked like this. So come down right there, right? So we may see that, oh, maybe this one is it's gonna make a neck leg down, right? But let's see it go down to the level. This is how it looked on Tuesday. Okay, let's see at the end. At the beginning of Tuesday, how it looked like. So how it look like right here. Oh, this is at the end. Now we want a beginning. Just here's it look like on Tuesday. So it down to that level, and you see that the Asia is consolidated in the range of the prior day PM right there, and London just slightly rate this liquidity, the low right there, the south side. And then only New York is still in the London range right there, but it's below the Asia. So let's see how at the end of the day it looks like. So at the end of the day, that's how it looked like. Oh, so at the beginning it looked a little scary. Yep. Then let's see at the end. Yeah, so you see that's the 8. Oh, wow. You see it gives us a lot of setup. Just be patient right here. You see the 930, mark down the range right there 930, and you see right here what a setup we see right here. Wow. So it's happened in so that means that when you see that the Asia is in the range and London may mainly still it moving down but still basically still the range of the PM, and you see that go into what, go to 930. uh, uh, it create this range right there. Don't trade them, wait until the PM. That's where the huge, because you see all of this, it just try to engineer the query and boom, it gives you the setup right here at 2 o'clock right here. See that break stack from above, that is type 1 right there. Uh, very reliable, right? But if you look at over here, you can see that it's break, that's from below, reverse, so you have a double bottom right here. Yeah, it's break, reverse, break, and reverse, so that's the double bottom, right? So it's overlap right there, and this setup very reliable, especially on the second leg. You see type 1 or type 2. Oh man, it's so reliable. Okay, we go back. Let's do the write up for this one real quick. All right, so here's the 4 breakout type 3 double bottom, and it leading to reversal right here at the PM 1345 right there, and we can see that one more thing we need to do real quick. All right, so we see that is the double bottom right here. So it's the first bottom, second bottom, and the key level is the low range of the 930. Set the range right there at 66, 99, 50 right there. So you see that, and then the reversal reclaim happened at 1345 right there, and it gives us a lot of confidence right there. So you have a fair gap up right here, okay? Fair gap up right here at this level. You don't have fair gap down. You see that this 2 candle right there, that's the break. There's no fair gap down, but you have an up right here. It break up right there, so it's a very high quality setup. Plus the second bottom is the 4 breakout type 1 by itself. That means it break that level, it tests from below, and then boom, it reclaims. So that's type 1 right there. And look at the Monday. We also have a type 3 right here for Monday. It's opposite on Monday. The 4 breakout type 3 double top, in this case double top right there, reversal. And on Tuesday the opposite happened, was double top right. The Tuesday is the double bottom. You see that? That's the double bottom. That's the double bottom. This one is the double top. Is that amazing? That's right, it's amazing. So we just fix this up a little bit. I think the verbiage much better with the reversal double top right there. It's the rally on Monday. It continued from Asia to London, and then it reversed from here. So, and you can see the photograph here twice. Actually right here is the first photograph, and this level key right here is not photograph, but if you see at that level, you see the photograph. So 930 also key level. Wow, can you believe that? The 930 on Tuesday is the level of which to reverse, create a double bottom right here. And the 930 right here create a double top right here, right? Oh, that's amazing. Wow, it's run so accurate right there. But anyway, we're in hard time, but we want to show you the embarrassment that we make. We blow up our account on Tuesday, Thursday, and Friday, 3 days in a row. Let's see how we do that. So we can close up here. Here's the Wednesday. Oh, so here's on Wednesday, first trading day of October. So it's we go in and we see that wow at 9:30 is right here. It's explosive. So we just put in one contract, and here's is on the thinkorswim chart right there, and we mark this trend. We know that it gonna hit red trend, but the question is when. And that's the lesson we learn right there. Instead of take profits, we should take that profits. Whenever you see explosive, you just take profits. Get out first. But we didn't take profits because we thought it's just one contract, and when it come back here, we just get break even and get out. And then we miss the trade, and then right here. We start shorting. We thought right here, you see that it break and reverse, so we short them. We make mistake right here. Because you know why? Because the 930 right there, it make the break up that range right here. You need to let it break at least twice a level before you try short them. Otherwise, you will get lost. Exactly. So you see right here, it break our level. That's from above. Now it break it. See that? It's break it. It's gonna go up real hard. And look at this. We try to short again. Yeah, we try short right here. We thought, oh wow, it's gonna come down. Wow, we increase the size right here, and let's see how late. You see that? It go back and hit on it. So it break the level. We thought it gonna be reverse from here. Yeah, we see like that. Right, break step them up and reverse, and we try to short them again. Yeah, it go into our favor right there. Boom. We just get out because move very slow. Boom. Yes, that's the good get out. So, and we try to short again right here. Most like the first leg of the trade, next leg. Yeah, we go too early right here, my friend. It's not right. Oh yeah, it got your favor, but let us see. Did we take? No. Okay, and now we are shorting again, and we go big. It's crazy. That's because we try to be right. Yes, that's the whole idea. Don't try to be right, and that's how we blow up our calorie there. And I think we reset them. Yeah, right. That's come out. Yeah, and we get angry because we want to be right, because we want to short them. We want to be short. That is the mistake we make, and then boom, we get out. And you see that? That's the oh wait, we try to be right, and right here we could stay a little bit longer, but we get nervous, we get out, and that where we should let it run. It can hit our target right there. Let's see. Oh yeah, we didn't have targets because when we reset the the account, we have to reset our default or templates right there. Yep. So that's how we blow up our account right there on Wednesday. Let's see what happened on Thursday. So here's on our Thursday, right? Okay, so yeah, so we see the first down move right here. We jump in and short them. Is that right? Yeah, we short them. Where this? Yeah, we short up here, and then we take profit right there. Let's see where the entry. Yeah, we miss the entry right here. So basically, we short right here, and then when it down here, we take the profits. Is that right, or we should stay in longer? Yeah, now we try to go long right here. We say, okay, this level, that's how I'm gonna break and reverse. We have to look on the liquid out here. It's not finished yet, so don't go in. And we go boom, we pay the price right there. Right? If we should stay short on that trade, we should let it run. That's the same mistake we make on Monday, we believe. Yes, that's how we blow that account right there on Thursday. That's the end of movie. Right? You see, if we let it run, when we short right here, it will hit our target right there, which is the PM low right there. So that's the mistake we make on Thursday. So Wednesday, Thursday. And now look at the Friday. Even better. Yeah, we're doing even better. So right here. So we go in with short right here. We thought that it reached the sell side, that they're gonna revert from here. There's no setup for a year. We have no business trade here, but we have try to be right here. You see that so big. That's the first candle, right? 9:30 it ripped right there. We should not get in the business right here. So we have mistake. We chase right here, boom, and now we short them. We get mistake right here, and I think we blow up again. Yeah, we didn't take the picture of the blow up, but we blow up again. We try short right here. It's a very embarrassing mistake right there. And we have to talking about the mistake we made to hold ourselves accountable right there. But anyway, we have a wonderful review for today. We need to close up here. We gotta get out here. We're grateful for the opportunity, and we thank you for your time and interest. We do work with love and success coming our way. Have a wonderful weekend, and talk to you later. Bye for now.